support and resistance levels. You're gonna need to be able to draw these. I think that they're pretty easy to learn for the most part, but there's a lot of context that you're going to need to figure out for yourself. And over time, you'll be able to just kind of be better at drawing these support and resistance levels and being more accurate with them. So these levels are contextual. How you draw them might change depending on the asset you're trading, the time frames you're trading, and yeah, overall context and stuff. For instance, if we go to a blank chart, right, like ETH, and then we go change it to the daily, all right, when you zoom out, how you want to think about this in terms of drawing like support and resistance levels is you want to like throw a spear and have it touch as many like points as possible. So imagine there's like a ball on top of each one of these like pillars, right? And you're drawing you're throwing a spear. You want to shoot it through like as many of these balls as possible. So now you draw a spear, you can very easily see there's this level right here, right? And this can happen on the maximums, like all of the highs here. This can also happen on all of the minimums. So even if it's like kind of messy, you can still draw a spear like here, right? It's touching there, it's actually touching here, somewhere there, somewhere here, right? It doesn't have to be accurate, right? We can define a little bit more accuracy after that. And then like even if you zoom in a little bit, right? Now you can see like between 2024 and now, like there's this level here, right? There's 3, and then there's even some here and here and here and here as well. So now you can kind of draw this level, right? So being able to do this on like a high time frame will give you the very clean levels, right? And so how do we clean it up, right? Well, there's a few ways to do it, but let's say we draw a line right here, right? This line is set to be 4,026.88. How do we refine this line? Because we can see prices at that line. Now, we can refine it by saying, okay, let's round down to 4,000, right? 4,000 might be pretty good because it's a huge psychological level, right? So when we go down to the smaller time frames, you can actually see if we set this exactly to 4,000, right? We actually had some interactions here earlier in the day. We had a sweep of the level first, and then it came back and grinded above the level. And we actually saw like a very quick reaction over the level, which if you were around for this, you could have probably taken it somewhere here. But yeah, like a very clean reaction to 4,000. So that could be a good sign that 4,000 is like a level to use. And I'm using ETH as an example here because that's kind of like something that's at a key level that could be a good example to utilize. However, like you'll notice that we actually have highs over here, right? There have been highs that have kind of defined like the top of like 2024, for example, is 4109. Or in March, right? Over here is like 4,092. This minute difference kind of can change between different exchanges, right? So if we go to the Bybit chart, the high is like I think that's 4111, right? It's $2 over the OKX chart that we were just on, right? It's not going to be like super accurate, and so that's why, like, when you take the trade, it's going to be on acceptance over the level, right? I have a different video on this that I can re-record for public use, but for those that are in the Discord group that I'm sending this to, probably like you'll have access to that video. So yeah, like then like once it goes over this level, you can just take the long with acceptance above and like take a trade something like this and then target wherever. So now on intermediate levels, right, you just take what looks obvious. Try to mentally like even draw out a zone if you have to, like a rectangle, and then notice the touches. Notice the touches. And then just draw a level, right? And then I guess like you could also ask yourself, is there a psychological level that's close by? 2800. You could round up or down to that level. You can also probably zoom in to like reactions at the level to see like, does it have a reaction to 2800 exactly? Or is it like a very precise number? Because like right now, it actually looks like it's 2796, right? That's kind of up for you to decide what exactly you want to do. I would say just round up or round down to like the nearest psychological level. I think that's a good heuristic most of the time. And yeah, like that's pretty much it. You literally go to a random chart and just draw levels that you see, or have like circles at maximums and minimums, and then just try to visualize that you're throwing this spear through levels, right? I can see a very obvious level right here, right? If we just delete the circles that I made, then you can see like we're actually reacting to like 2100. Yeah, very clean, 2100 roughly. So it doesn't have to react to the level itself to take the trade. It could just be close by, and then like you could take a very obvious price action near the level. Like if it sweeps the level and then like continues upwards again, like you could very easily just take along with this invalidation at the bottom of the sweep. So yeah, this is probably how your levels should be defined. Very obvious levels. You can also define levels based off of events. Now, events were somewhat significant earlier on in the year. Now, though, it feels a little rare for events to mark a significant top or bottom. But one important one earlier in the year was the SBR highs, right? When the Strategic Bitcoin Reserve was announced, like this level being reclaimed was very important for a lot of coins. I remember, I think like, what was it? I think WIF. Yeah, I think at some point like WIF broke free from this SBR highs, and that was like a level where like we kind of defined some longs at, right? When WIF broke through these SBR highs, I think like this was a long to potentially take. There were a bunch of other coins that broke free from this SBR high, and like it made huge moves that day when it did. So we know that SBR highs defined some sort of level on some coins. Now, if we like zoom out on Sol and we see the SBR highs right here, right? If we try to draw a line through it, look how messy it is, right? There's price action here, 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 here. It's not very clean to what is the level that you should be using. So in that case, what you probably want to do is refer to like a more recent structure. So like just zoom in probably to like the last year or so of price action. Like I have like August to now, and then try to base your lines off of this, right? We know from Brandon's charts that he had I think like forget I think he had like 169. Either way, like now if you zoom in, like it's still kind of unclear. It's kind of messy, and like this area is just very unclear. So this is an occasion where I might just use a zone and then just use highs that have been formed, right? Like if we just use SBR highs, look how messy it is. It's unclear if there's like a level to reclaim. So very easily, like also a psychological level of like 200 here. That might be just very clean to take, and then just use the highs that have been defined. You can probably align it to either the bodies or the wicks. In this case, like I would probably use the body. Uh, there's just kind of like a lot of stuff that you can play around with, right? In this case, like pretend that we have a circle here, right? This is a circle of price action. Circle of price action, you draw a line through it. That connects to roughly like 262. It is subjective. There's a lot of subjectivity to it, but as long as like you're using it as a level, when the price comes to the level, just watch the reaction to it. If it doesn't react to it, if it kind of like just like does this or something, or even shoots through it and doesn't really give a clean retest or something, then the level is probably washed and it's not really a level. So you're going to want to watch for like you're just going to have to make a judgment call when you see it, and see if like you think that it's reacting to the level or not. Usually it will react somewhat. So for example, on ETH, we were watching for the break of 4,000. You can see roughly it straight rejected 4,000 and then came back and tested it again. Right? Or on BTC, right? If you zoom out all the way to like 112, like look, it reacted to it on over there, and then it also it reacted another time here at the actual breakout. It reacted once here, and then it just shot through, right? So, yeah, the cleaner the level, the better it is. Right? So you could see how like clean this 2800 is. It's relatively clean. Like it's not perfect, but you can kind of tell like there's some price action here and here and here and here and here and here. So it does provide like a very clean separation of this. Like you can see these clusters very clearly that are separated by this 2800 level. All right, before I move on, I want to also go into low time frame price action. So low time frame price action will still have these levels. Sometimes it's hard to see just because it's so messy. But if you can identify these levels, you can probably take some trades with them. Now, this is a little bit messy, but like, for example, on July 29th, I identified this range. And this range was happening across the course of like 4 days or so. Like I could tell, right? There was a high being defined here from market hours. So this is 8:30 a.m. PST, which is 11:30 a.m. EST, and it was producing like this kind of range. And so there was like bottoms here, and I noticed that there was kind of like this range that it needed to reclaim. And when I took this trade, for example, these are 15-minute bars. So I saw this. I saw that price action was very clearly just going straight up over the course of the past few hours. There was a little pocket of like 45 minutes where it was going down, but into this kind of very clear level, I saw very clean price action upwards. And this is at like midnight, my time, which is 3 a.m. EST. So I noticed that, and then I zoomed in even more, right? If we go back to July 29th, let's go back. Right, you can see when we're zoomed in, those levels were very clearly defined. And then I was kind of like looking at it here. I saw it come back down and then back up over the level. There was like there was sort of some reactions around the level. So I knew like the level was probably still like a range high that it needed to break through. And then eventually I took it like right here. Because I liked how it shot through the level and it was showing sustained price action. It was like midnight, and it didn't like completely nuke back down underneath the level and do something like this. So I just took it. I took the trade, and then that ended up being a huge win for me. So like, you can notice that there's these ranges that form on low time frames. There's also like 5-minute ranges that you can probably take. Like if we just look at this chart, right? If we look at this chart in isolation, how do we identify a level? Same thing. You look at the maximums, right? Is there kind of a level that goes through them? Yeah, there is. Right? And then you delete the circles, and now you can see like I didn't even try to have it like hit these levels. I just kind of drew circles and then kind of aligned my crosshair over the circles, and I just clicked, and I actually got a very near perfect like level to work with. Right? How would I refine this? Well, if I see a cluster of price action like this, my first instinct is to just use the leftmost one, because that kind of defines the high wick to use. This is subjective, of course, but you'll notice that we actually have two perfect connections to it. So that's possible. And also the body of this almost perfectly aligns. So I'd probably keep it somewhere here, 3928. You could argue like, yeah, there's probably a zone here. You could just use a zone instead. Sure, that works as well. It's really up to your own system. Right, I also see like maybe this high might define some sort of price action. And you can see when it zooms in, it's not super clean. There's like some weirdness here. So maybe you can kind of adjust it downwards a little bit. And now you have like good reactions to it. But otherwise, it's not really, it's kind of washed as a level too. On this one, I think like 15-minute, I defined like this as a level. Because it's 4,000, right? It's just 4,000. So yeah, there's a lot of different ways that you can do it on low time frames. Now, something specifically for how I trade the S&P is during pre-market, I identify clean levels to use. So I actually didn't trade this market today, but how I would have done it is mark the pre-market highs and lows. And it's very clean, right? There's a level right there. There's a low like right here. There's also a low over here. And so like this low kind of combines with like 3 little areas there. And yeah, you just create those levels and then see what happens, right? In the first 15 minutes, it actually started to breach these highs. And that's how I take the trades on the S&P. Like if it breaches the highs, I wait for like some price action to kind of resolve and show me that it's continuing upwards. And so I probably would have made this trade, something like this, and then target the FOMC lows, which it actually nearly hit. And this is a 2-to-1 trade. I could also tighten my invalidation to be like here, so it's a 3-to-1 with my hard stop like down here. So this is probably a trade that I would take, but I missed it. And there's also sometimes like highs that are defined by key events like FOMC, which tend to produce extreme values that are interacted with quite a lot. So in this case, FOMC highs created this level, which did get some reactions over the course of like the next day or so. And I assume that it will probably have another reaction here as the highs. And the lows also, in this case, they didn't actually have that strong of a reaction, so it's not really correct, I guess, to use it entirely, but it's really up to you. Basically, as a function of it producing extreme values, it tends to produce a level for you to use. So now what I want to do is kind of go to like random charts to give you a sense of drawing these lines. So I'm going to pick any coin from my list, right? Let's go to grass. And I'm going to pull it up on the Binance chart because it should be clean. And okay, this looks insane to trade. But again, like draw the circles, right? You can see the maximums in a line, right? There's also like, okay, sometimes the chart just so schizo that you're just unclear. Like maybe somewhere here, this is like 220. Maybe somewhere here, 350, 360. Sometimes like you just cannot be accurate with these, man. You just gotta do your best. And if it's so messy, just wait for the highs to be reclaimed, right? If you can just reclaim the highs, this is good conviction too. Then you don't have to really worry about like all of this shit. You can just worry about like using the high points as the level to work with instead, right? Okay, let's see. And I guess like if we were, let's say like we hear something insane is happening to grass right now, how would I draw that, right? I think like I would use this wick, and this would be the first level it needs to reclaim. Ideally, I would want to target the top of like this cluster, and that kind of aligns with the bottom of this wick. And then like this would be the next level to reclaim or use as a target. There's also like this low here that I see like some small interactions with over here and here. And yeah, probably after that, I noticed like $2 maybe has some reaction, but probably not a lot, not significantly. I think I would just target like the top of this cluster and then the top of this. And the reason that I'm like even though these are so close together, if we think about it on a more like reasonable scale, the difference between these is 16%, right? If it goes from here to here, it needs to go up 16%. That's a lot of percentage in a day. So, like, yeah, I'm gonna have these be two separate targets, right? Because think about it. It took 16 days to hit between these levels. So it's reasonable for me to use these as separate targets rather than just going for this one immediately. Let's go to another coin right here. Move. All right, move. Now, I'm just going to trash these drawings and redraw it, right? So we can see right here, very clean level. Down here, touches here, touches here. This and this are perfect touches. Probably highs. And then there's like a kind of zone here to kind of work with. This seems like it's March. No, it's April. Okay. I wouldn't trade this. It's kind of just down only. Like you can very clearly see it's just down only. But if you wanted to trade low liquidity coins, you could. These levels don't work as well on low liquidity, and move is very manipulated or low liquidity, and so it's just not worth trading. You can even see how low of liquidity it is by just looking at the wicks, right? Every single green candle has wicks. There's like clusters of green that are followed by clusters of red, right? So I wouldn't trade this. Let's go to something like that actually has something. Right now, what's topical is Link. So Link, it's also a little schizo, but Link is like one of the more, I guess, blue chip coins, if you want to call it that. And again, like, there's no... We can see there's some reaction to $20. And $20 is, like, relatively significant-ish. But again, it's not Omega clean. It's decent, though. And that's kind of all we need. Because we've identified that this coin has relative strength and is showing like insane price action, stronger than a lot of the other coins right now. So it makes sense just to like get a rough level. And in this case, we can align it with the price action that we saw from December through February, and it produces like these wicks. And $20 is a nice psychological level too. Now, as for targets, like you could use like 26. This was my target. There's also like a very small cluster at like 22-ish that could be interesting to use as a target. That's kind of like my initial target if it loses strength and stuff. But yeah. The final thing before I go is I want to kind of go into stocks as well. Stocks are basically the same thing. The same principles apply, except there's going to be like more up-only price action, but also just like a lot more schizo shit that you see. Like even Apple, a company like Apple. Look how messy this chart is. Holy fuck. But you can still identify like there's a zone here, right? There's a zone where there's clusters of price action here and clusters of price action here, and it's split down the middle, right? So you can use that to your advantage and take a breakout of that zone. And I actually yesterday, right after this was Tim Cook in the White House. This was the price action the day of. I noticed that it was just still sustaining and slightly moving upwards, so I actually longed it over here at 219.25, and today just went straight up. Look at that. That's very nice. Something like Kratos. This is something that I was in for a little bit. Like, you can see, like, there's some kind of area here that it reacted to. I happened to long it, like, I think over here. I didn't get it on a retest, I think. But there's also just, like, this level that you could have used, right? Sweeping, but it kind of had, like, some positive price action at that level or above it that you can use. And it's like this for a lot of stocks. One stock to kind of, like, pay attention to, for example, is SoFi. SoFi, I noticed that it had relative strength over here, so I longed it. And, like, on their earnings, it popped and it hit my target level exactly, or near exactly, right? It hit $25 and it just swept it and came all the way back down. So, like, these levels are really useful, and, like, they work, right? It's just like, how I think of these levels are that there's people that have limit orders here. There's people who are shorting here because they think there's downside. There's people who have it as a target that are just selling it there. There's people who potentially are getting liquidated there because they max positioned in. And at these levels, they're just PvP, which means that if it can show acceptance above or below the level, then you know that whoever won that battle of PvP, either the bears or the bulls, you know that it's probably going to go in that direction, right? So if this went above the level and it's sustained price action above, this would be a great opportunity to long it to the next level, 28. That's just how the system kind of works with these trades. And yeah, I think that is pretty much all I want to talk about with these levels. So, but yeah, if you have any questions, feel free to leave them as a comment below. I might make other follow-up videos, or just, like, DM me on, like, Discord or something. But yeah, that's pretty much it.